Good afternoon, everyone. So I'm very privileged to be the first one to talk at this gathering. I will start with a little bit to form up a story. So a couple of weeks ago, I was invited to speak up in front of the graduate bachelor students at the University of Zagreb, talk a little bit about banking supervision, and that was pretty easy. I'm working in the banking supervision for more than 20 years. I was a fully fledged on-site, off-site inspector. I was analyzing system, developing data warehouse in Croatian National Bank, negotiating with the EU. And 4 years since the SSM started, I also joined ECB. So I was working there at the SSM, supervising subsidiaries of the US banks in the Eurozone. And a year ago, I returned back to Croatia at the invitation of a governor to prepare Croatia for Eurozone, because we, in May, submitted our request to join both ERM2 and establish close cooperation with the ECB. So this was on my agenda, and I passed that to the students. But the funny thing with the students was that before actually all of this experience sharing with them, the professor who invited me wanted to make a photo. So we turned out all to be there, gathered in that big room, and we couldn't fit into the camera of the assistant to the professor. So he said like, "Oh God, you are so many," right? And one of the students before, actually I started with my talk, said, "Yeah, we are as many as much there is a financial regulation." So I was thinking, my God, even these guys just graduating from bachelors, they are indoctrinated with this kind of notion there is too much regulation. That's really weird. But going back, I would say that's not pretty weird, because when I started to do my banking supervisory work, actually all of the list of the regulations, this booklet was this thick, literally. Now, when I think about it, I think this is how thick is the list of all of the regulations that the bank has to apply. So, did we get it wrong at some point? I don't know. I usually at this talk on financial regulation say that if by any chance Moses was proposed to have 10,000 commandments by God instead of 10 commandments, his poor nation, his poor people will be still there wandering in desert somewhere. They would never get out of desert. So there is a lot of regulation for sure. And there should be some sort of talk of how to make this regulation functional. So I will keep my talk in terms of 3 things we should, I think, do better in Europe. And that is to make the regulation more fair, more functional, and more forward-looking. Fair. We have to acknowledge that the terms for making money for banks have really changed. So we all learned in college that there are 3 functions of money. It's some kind of a measurement of how much something is worth. It's a means of payment. It's also a commodity, which we save. So putting aside this measurement thing, as a payment, we are expecting and we are experiencing complete drastic changes in this chain of payments. So money is moving in a very fast way. Everywhere else, there are new organizations, new technologies popping up that are actually putting banks a little bit aside. As a commodity with negative interest rates, it's very difficult to understand how you should save, what you should do with that commodity. So banks are struggling, their profitability is struggling. They have to search for new means of profitability. They have to have financial innovation. In those terms, regulation should be fair. We should allow them to have financial innovation. They have to make money in different ways. At the same time, if we are so concerned about security, about the stability of the system, we should also establish a very clear regulation that would have some kind of KPIs of what we want to establish with these regulations. In many instances, there are different incentives in Europe that have a quick fix for niches of problems, NPLs, AML, etc. It's the bank that has to apply it all and remain profitable at the same time. I would suggest to be fair and to establish a sort of a system of regulation that will monitor financial innovation and not to really suffocate it at the very beginning. We should be more keen to take sort of a risk in that sense. functional, being functional regulation. I think everyone who is there, are a lot of juniors here, but if you remember when euro was introduced, people were saying from the banks, well, that's great, we have euro, but actually if you want to move on money side, it's very difficult because we don't have single European payment area. So moving from one account to another was very difficult before we made this infrastructure. So what are we doing also now? We are producing still a lot of directives as regulations. These are not functional. You have to transpose them in the national regulation. Usually they are gold-plated to protect the competitive kind of position of the national, let's say, heroes in the banking or whatever is the aim of the country. So it's impossible for the banks to compete in that environment. We should have more regulations. We should have more like a functional regulation that could be easily applied wherever you work in Europe. In that sense, we need really deposit insurance. We should not wait for NPLs to, evolve further. We should make a progress in that sense. Capital Markets Union, of course, we should make progress also in that. Brexit is a chance for the continent to say we could have London or many Londons as such in our jurisdictions as well. But also we have to have one position of protection of all of this banking being done and remain functional. And that is like a single agency or authority to protect the European banks against cyber risks and anti-money laundering. If the army of our countries would recognize that the enemy could come from the land, from the sea, from the air, we know that they also build the forces to fight the enemies which are coming from cyberspace. So that cannot be done in the national boundaries. It should be done at the European level. It's really silly to think that we could make some kind of resistance and build a resilient system on our own. The same works for AML. So I would vote always for having more regulations than directives in that sense. And finally, looking forward. So the banks are seriously changing. They remind me in a way of, the position where old dog is trying to learn new tricks. The banks are talking about digitalization. When we did a first survey of the small market that we have in Croatia about digitalization, asked our colleagues first to develop a vocabulary. What is actually digitalization? Because people talk about digitalization in many instances, and what they're talking about is actually digitization. They put paper in a digital form. They are not digitalizing the processes. We like to call them and explain to them, unless your feet are in the cloud, from the start of the issuing credit to the actual extension of the credit, you're not digitalized. You're just digitized in a way. So human touch at any instance is not a digitalization. So these new banks are learning new tricks. Will they manage? I would say that in the next decade, we will definitely live in a parallel universes, where these big mastodon banks will either learn those new tricks and survive, and there will be new organizations popping up. It is all driven by us as clients and customers of the banks. We really want to have, as Alan mentioned, smartphone experience. So especially younger generations, they don't care about security. They just want to move money from one side to another. In that sense, neobanks, as we would like to call them, have a completely different governance. There was one investigation, there was one research, I was told by our Croatian colleague, of one particular banking system in Europe, where they spotted that 25% of the board members have actually a background in engineering. So the boards are changing because new banks, they are not competing in financial services, if you ask me. They are competing in technological solutions. So from the era where they were working on the same, let's say, technologies, now they are developing new technologies. They are becoming technological firms. And in that sense, we as a supervisors also have to change the way we approach to that. There is a very interesting, I think, Oliver Wyman assessment of how supervision should change in that sense. And what they advocate, and many bankers are advocating for is to have more like activity supervision and not legal entity supervision, which really makes sense because at the end, what we have to make sure is that this technology kind of works through all of these areas. So going back, to my first points, to be fair, to allow the banks to do whatever new they have to do in order to survive, be at the same time flexible, make sure that this money, just like in SEPA case, can move from one side of the other in terms of capital and liquidity, which is so suppressed nowadays with this ring fencing of different national regulations, and be ready to support them and have this change also in the supervision environment and change the composition of how we do supervision. It's difficult to change, but it's, I think, necessary for the prospect of European institutions.